We see the markets falling back significantly this week, really undoing what we saw last week. We had 5 days of gains, 4 days of losses this week. Do you expect this bearish trend to now continue?
I think the bulk of the losses have been on profit taking, as well as the outcomes of higher yields on the 91-day paper. Yesterday, the yields on the 91-day paper came just north of 13%, and previously the 182-day paper came at around 12.6%. So I think with that in investors' minds, they're moving their money into fixed income securities, so because the yields there are pretty attractive. So I think in the short term, as long as the T-bill rates remain as high as they are, we are likely to see the index continue on its decline. However, if you consider that the October, November, December rains are going to be pretty good, and as forecasted by the meteorological department, then that could impact yields in terms of having shorter yields on their T-bills, and we could see a lot of fund managers and investors moving back into equities because of lower yields on 182-day paper.
The bond auctions this week have also been severely undersubscribed. Is that just a case of what's taking place on the liquidity front in Kenya?
I think so. And it's a confusing situation because yesterday the CBK allowed the T-bill rate to go around 13.1%, 13.2%, and they allowed the 182 paper to come at around 12.6%. But they rejected almost 3.7 billion on offer so as to maintain 2-year interest rates at 13.89. So I think it's confusing because if they can allow T-bill rates to go that high, then why didn't they allow the 2-year paper to go at least high at around 14.5%? So it's a bit confusing on the fixed income side. But I think, again, that with the T-bills, it's a liquidity problem because the Treasury needs money, and that's where they're willing to take T-bills and not bonds.
As we near the end of the week, that shilling looks like it could hit the 100 mark against the dollar. Of course, Kenya really a victim of what's taking place on the global markets at this stage. What are your expectations now? Have you changed your expectations for inflation, given the fact that the shilling has depreciated so significantly in the past 2 weeks?
Indeed. You have to change your expectations in inflation, especially because the shilling's effect on energy prices. Last week we had importers planning and budgeting to buy their inventories at 93 shillings to the dollar, but just over a week that has changed to 99 shillings to the dollar, and that's a significant rise. And of all those costs, all those dollar costs are going to be brought back to the consumer, and you're going to see inflation coming in a bit higher, probably around October, November, and peaking at around November, because we expect that once the rains come and the water levels are back in the dam and they're appropriate, then we'll see a change in the energy mix from thermal, the more expensive thermal that is more prone to exchange rate fluctuations and crude oil fluctuations, to hydro sources, and that will positively impact the inflation. So I think from October, November, we are likely to see a high inflation rate based on the exchange rate and other factors. But I'm optimistic that from December onwards, the inflation rate is likely to fall.
Of course, the rains will be a much-needed blessing to the economy. Let's look at that agricultural sector, specifically in light of the tea counters, because that was the largest foreign exchange earner for 2010 in Kenya. What are your expectations for the tea counters going forward, and what are tea prices doing on the international markets at this stage?
Last week's auction in Mombasa recorded higher prices for tea, and this is on the back of some supply shortfalls in Sri Lanka, which is a major tea producer. So we are likely to see higher tea prices going forward. And if you add the effect that tea producers and a lot of agricultural stocks are net exporters, then they're likely to benefit from that. So we are likely to see higher profits going forward for tea producers. And I think that's going to be a good factor for them because also the shilling has weakened. So going forward, we expect higher profits for tea.
Which is your
producers.
favorite stock in the sector?
I wouldn't say I have a favorite because the dynamics are rather different. But I'd watch out for counters like Sasini and Williamson Tea. But Williamson Tea, the fact is that it's an illiquid stock, so it would be difficult for foreign investors to get into. But I think in terms of liquidity, I think Sasini would be the best.
Now, Access Kenya continues to bear the brunt of the sell-off that we're seeing. It did jump 1.74% yesterday to 5 shillings 55 cents, but of course that comes after hitting an all-time low the day before. Is this just a case of investors selling it off, given the fact that you have large telcos being more aggressive in the data space?
I think it's a case of it's a case of the latter, with large telcos dominating the data space nowadays. If you look at Access Kenya's revenues, they have been actually declining from 2009 to 2010 and 2011 in terms of half-year revenues. And the only way they've maintained their profits is by reducing costs. So from a top-line perspective is that Access Kenya is not doing well, and it's been this case for the last 2 or so years. So I think they're really a victim of what's happening in the telecom space, with regards to competition from larger players like Safaricom, Orange, and Zain.
Are we likely to perhaps see an aggressive, hostile takeover here?
I don't know. I mean, Access Kenya is a relatively strong ISP in terms of the ISP space. But if it makes sense to the larger companies to do so, then we are likely to see it. But it's a case-by-case basis. I'm sure the larger players will consider acquisitions on a case-by-case basis. So I wouldn't be willing to exactly say if we're likely to see an acquisition. But if it makes sense for the bigger ones, then why not?
Samora, thanks very much for your time on this Friday morning. Samora Kariuki is a research analyst at NIC Securities.